Hey, so it is October, basically the last part of the year, the tail end of the year. If you're anything like me, you get to this point where you're like, well, I've survived winter. Christmas is like next week. There really isn't much time left for the end of the year. It kind of just compresses into a very short space in time. And it's really easy at this point in the year to kind of feel like the year is pretty much done. So whatever you've achieved, and now it's time to start focusing on next year. But the fact is, there's still like 2.5 months left in the year. There's 3 months left in the year if you include Christmas, which I don't, because no one wants to work over Christmas. So there's 2.5 months left in order to actually make stuff happen. And when you think about it, at the beginning of the year, when the kids finally went back to school, we didn't sit here and go, well, the next 2.5 months don't count. No, of course we didn't. We were like, finally, now I can fully focus on our business and make stuff happen, and so much can happen in 2.5 months. So we want to make the most of it. So today I want to talk to you about kind of 5 steps you can take to help make sure you achieve your goals for the year. Now, there'll be some of you out there, and I've heard a lot of people recently talking about setting like 90-day goals and 30-day goals and absolutely smashing it when they actually set some goals. So today we're going to talk about how to work out what those goals should be so you don't just hit your revenue targets, you actually hit your salary targets. The steps we're going to talk about today are steps to help ensure you end the year having earned the salary you actually want. Now, this process works whether you calculate your salary on a calendar year, so January to December, or whether you calculate your salary in a financial year, so from the 1st of April to the 31st of March. You can use the same process, just use the different time frames for when we are doing the working out. So, what do we need to do? Well, this is basically a health check. This is something that I recommend every business do a couple of times a year. First, probably after the first 6 months, and then again in the last quarter, in order to keep you on track and keep your motivation high and focused on activity that's actually gonna get you where you need to be. So here are the 5 steps that you need to walk through. So, number 1, goal salary. So for some of you, this is really easy. What goal salary do you want? Like, what is the goal that you're going after when it comes for salary? Some of you will go, yeah, I know exactly what that number is. Move on. For others, particularly if you haven't been paying yourself a regular salary for a while, that's actually a harder question to answer. But if you don't know what the answer is, it's really hard to make a plan that gets you there. So the first step you want to do is actually work out, what salary do I want to pay myself this year? Again, it can be calendar year or it can be financial year. Work out what it is you'd like to earn. Now that could be for the year as a whole, which we call per annum, or it might be what you'd like to have in the bank on a monthly basis, and then multiply that by 12 to work out what it would become on an annual basis. Now you want this number to include tax, just so that we don't miss that part out of the equation. So tax is normally around 30%. It often can be lower or higher depending on which country you're in and what your personal circumstances are. But if you start around 30%, if you don't know what it actually is, that is usually a fairly safe bet. So you want to make sure that the number you're working with salary ends up being the number including tax. So work that out, and that is your goal for step 1, your goal salary. Okay, so step number 2, you've worked out your goal salary for the year, what you would like. Oh, and I should point out, that might not necessarily be like your ultimate salary. For now, it could just be the minimum salary that you're happy with, not necessarily the ultimate salary you're going for. But it's much easier once you've already achieved the minimum salary. It's so much easier to then take the actions to achieve your goal salary than it is to go from 0 to 100. So when you're considering your goal salary, just make sure it's achievable and something that you want. Okay, so step number 1. Step number 2 is updating your business budget. So hopefully you should have what we call a business budget, which is basically probably a spreadsheet that lists all your expected business costs. So you know how much it costs to run your business. We generally call these overheads. So at this point, what you want to do, you're either 2/3, 1/4, what am I doing? You're either 3/4 of the way through the calendar year. You've had 9 months so far, or you're about halfway through your financial year. At this point, you should have a pretty good grasp of how much you've spent to date and how much you think you're likely to have going forward. So this is your updated budget. Now, if there are some business costs that you think you had planned on earlier, but you don't need, take them out. Or if perhaps there's something coming up, like you'd really want a business coach, but you don't have the revenue to pay for it, then actually feeding that into your business budget so that you make a plan to generate the revenue to pay for your business coach is a really smart move. So you want to update your business budget so that you are accurate on how much you have spent for year to date and how much you want to spend for the rest of the year. That is your updated business budget in step 2. So step 1, work out your goal salary for the year. Step 2, update your business budget so it includes all the costs you've already spent and the ones you're expecting to spend over the next 12 months. Step number 3, add those two together. That gets you your target revenue. Because remember, your salary is not a reward for doing a great job. Your salary is a business cost that you need to plan for. So when we're setting out our targets, we need to make sure we're including in that target actually paying ourselves a decent salary. So number 1 is you work out what your goal salary is for this year. Number 2, you update your business budget to make sure it's up to date. And then number 3, we add those together to get you to your goal revenue, your target revenue for the year. Now, step number 4, we check out, where are we? So whenever you are wanting to take some steps to get you to a goal, you always need to figure out where you're starting from. Because where you're starting from will have a massive impact on what you have to do to get to your destination. So step number 4 is to look at your current revenue. How are you currently tracking? How much revenue have you already generated in the year to date for your business? Now note, there's a difference between business revenue and personal salary. So what we're talking about right now is business revenue before you've taken any of your business costs out. Now, you might have that in your Xero accounting system, or you might have it in a spreadsheet somewhere where you track your sales. Perhaps you're even just checking your bank account, or even talk to your accountant. However you currently track your revenue, you want to go to that place and you want to go, how much have I already made for the year to date? That is step number 4. Once you've got that number, what is the difference? So let's say that you want a goal salary of say 35,000. I'm going to use round numbers here. So your goal salary, step number 1 is 35,000, including tax. And let's say your updated business budget comes to 15,000. When we add those two together, we get 50,000 target revenue. What that means is if you were to generate 50,000 business revenue, you would be able to pay all of your $15,000 worth of business expenses, which would leave you $35,000 to pay yourself a salary. Hope that makes sense. Let me know if it doesn't. Ask me any questions. So what we then do is in step number 4, we go, okay, my goal is 50. How am I tracking? So if you're currently tracking at, let's say, 40,000, you've already generated 40,000 of business revenue this year, then your target for the rest of the year in order to pay yourself the salary is another 10. If your target was 50,000 business revenue for the year and you'd only so far generated say 20,000, then your target revenue for the rest of the year is 30,000. So what you want to do, work out what your goal is, step number 1, 2, and 3. Work out how much you've already generated year to date and look at what the difference is. That's the bit that we want to work with. So once we've done that, step number 5, the last step is to say, okay, so say my goal was another 10,000 in order to get my goal salary by the end of the year. How many clients do I need to get, or how many jobs do I need to do in order to achieve my 10,000? That becomes your goals for the next 90 days. That number. And that gives you kind of the motivation, because you know, if I can just get those, say, 10 clients or 5 more jobs or whatever it might be, you've got the confidence you're actually going to get to a place where you can finally pay yourself a goal salary. Now, as I said before, if you're doing this for a financial year, that's fine too. Just work out the difference for the next between now and I think it's the 31st of March, which is basically another 6 months you've got to generate that goal salary. So there you go, kind of 5 steps to do a bit of a health check and to ensure you get to the end of the year paying yourself what you're worth. Number 1, work out what your goal salary is for this year. Make sure it includes tax. And note, that is your personal salary, not business revenue. Step number 2, update your business budget to make sure it's accurate for all the costs you've already paid out and the ones you're wanting to be able to afford for the rest of the year. Step number 2, add those 2 together to get your target revenue. Once you've done that, step number 4, you want to work out how much you've already spent, how much you've already generated year to date, to work out what the difference is. What's left that you need to generate in order to achieve your goal salary. Step number 5 is to then use, okay, if I need to get another 10,000 for the rest of the year, how many clients do I need to get to make that a reality? What actions do I need to take to make that happen? Now, some of you are going to go through that process and you're going to end up with your end goal where you're like, that's totally doable. It's a bit of a push, but I can definitely make it happen. If that's the case for you, then the next pro tip is, what's the stretch goal? So if you've worked out what you need to do in order to achieve your goal salary and you're like, that's doable, then start to set a stretch goal, which is, but what if I got 2 more, 3 more, 4 more? What difference would that make to the salary that I can take home? Now, for those of you who end up doing this process and you get to how many clients you need to get in order to pay yourself a goal salary and you just go, that's too hard, let me know. I'd love to jump on a call with you, 15-minute troubleshoot, and help you troubleshoot your pricing and your goals in order to get you to your goal salary. Everything is achievable when you have the right plan in place, and I'd love to help you ensure you get to the end of the year with your goal salary in your bank account. So let me know. I would love to chat with you. I hope that helps. This is something you want to do on a regular basis, maybe every 3 months, to make sure the goals you're setting are going to get you to your goal salary. Love to know what questions you've got. Let me know if you've done this activity, how far are you away from your goal, and what actions you're going to take to get you there. Love to hear your questions. Chat soon. Bye.